Property prices are in, quote, free fall in dozens of major U.S. cities, with new buyers losing catastrophic amounts of money. Some areas, buyers have lost between $70,000 and $122,000 in just the past couple months. Much of it by first-time homebuyers who probably didn't have $70,000 to spare. That comes to roughly $1,000 per week, their punishment for braving a blue city in the worst mortgage rates in a generation. The number comes from Newsweek, citing a study by Point2 Homes that found prices are sliding in dozens of major markets, in some cases by double digits. So Memphis, for example, is down 17%. In fact, single-family homes are falling in 25 out of the top 100 housing markets in the U.S., and in 36 of the top 100 for condos. Those are favored by young families and the elderly. Of course, nationwide housing is still up, thanks to a frozen mortgage market, but in some cities it is fairly dire. So in budding post-apocalyptic hellscape San Francisco, they dropped $122,500 in just a few months. Couldn't happen to a better crowd. With junior hellscape Manhattan right behind at $70,000, lost to Jerome Powell's adventures in interest rates. Newsweek notes that a quarter of those buyers were first-timers, meaning young families trying to get a financial foothold. They're now very deep in the hole. In fact, many are now facing negative equity, meaning they owe more on the house than it's worth, as in their down payment is wiped out and they're now in hock to the bank. The wider problem here is the fading prospects for the next generation. So rising home equity has been the main thing rescuing Americans from a 20-year lost decade of productivity since 2000. So your earnings stalled, but at least you had the home equity. Thing is, even if that continues, home equity only works if you own a house. If the next generation is looking at renting for life, they lose the payback they were expecting for the permanently low interest rates. Already, you're looking at an entire cohort of people in their prime home buying age who will miss the boat altogether. So first-time homebuyers at this point are an endangered species, making up just 26% of buyers last year. That's down from half a decade ago. According to the National Association of Realtors, the average age of a first-time homebuyer was 36 last year, up 3 years from the previous year and soaring from a decade ago. So how many people are we talking here? Returning to the NAR, just 60% of older millennials in their 40s own a house. At that age, 64% of Gen X own, 68% of boomers, and 73% of the silent generation. So spot the trend. Carried to the entire population, that comes to 16 million young families left behind renting for the rest of their lives. So what's next? Brought to you by Unchained. The other day I described the Fed as stuffing an elephant into a canoe with no elegant way to get it off. They broke inflation, they're breaking the economy as we speak, and they've apparently cut off one of the last remaining wealth-building sources for young Americans. For millions of those young Americans, the American dream has become the American slog. Okay, we'll be watching. See you next time.